Listen, we have since 1987, it's been a very easy playbook. After Volcker vanquished inflation, took inflation down from 20% down to low single digits. The playbook has been, hey, if there's a bear market or a recession, we have a tool. It's called the fiat currency. We're going to just print the heck out of it. That's been the playbook from the Federal Reserve, and now the Treasury came on board in 2020 post COVID. That's easy to do when inflation is quiescent or below the Fed's asinine 2% target, as if the economy can't function with a 1.5% inflation rate. We could talk about that if you wanted to. But when inflation goes from below 2% for many, many years and then goes to 9%, and that's the way the BLS measures it, the Labor Department. If you measured it accurately, it's closer to 20%. Then you got an inflation problem. In other words, the market is losing faith in your ability to provide a real return for investors to vanquish inflation. So then you have a problem where you say, on the other end of this, if we have a recession and deficits go from $2 trillion per annum, which they were in fiscal 23, to $6 trillion, the automatic stabilizers kick in, deficits go to the roof, right? Revenue contracts violently because people are no longer working. They're not paying income taxes any longer. You blow a hole in the deficits. Usually, it doubles, triples. So you go from, $2 trillion to $6 trillion. That's going to be the deficit. And then the interest on that deficit and debt, which is now we're at, what are we now? $33.5 trillion in national debt. The interest is $720 billion a year. That's going to, just because interest rates went from 2.5% average interest rate to, I said 1.5 to 3, we're going to be paying an extra $800 billion. So you're talking about $1.5 trillion in interest payments per annum. Well, you got a problem if you're the Federal Reserve. If you're the Federal Reserve and your playbook now says, I am now going to paper over all this recession and the bear market by just flooding the market with money, the banking system with reserves. I'm going to lower interest rates, and the Treasury is going to do another round of helicopter money. Well, I mean, who's going to be fooled? What investor is going to be duped into thinking that the Fed or the Treasury is going to allow markets to function freely and allow interest rates to rise to a level that provides a real interest rate? Nobody's going to be fooled anymore. We just have too much debt, and asset bubbles are so humongous that the Fed has to come in and to engage in interest rate repression. And I don't think inflation is going to go from where it is now, almost 4%, back to 9%. I think it goes to 19% and then goes higher from there. That's a very real risk if that's the playbook from the Fed. Now, they might not do that, Anthony. They might not do that. They might say, because that's what they're talking tough right now. They might say, we can't do this anymore. We can no longer engage in this policy of ZERP and endless QE. Can't do it anymore. And then you have to allow the natural gravitational forces of macroeconomics is a catharsis. So you're going to have to see home prices plunge, right? You're going to have to see the stock market plunge. You're talking about a depression from where the markets are now to where they should be. Home price to income ratios at an all-time record high, blowing away where they were in 2006, the previous high. Total market cap of equities to GDP, higher than any other time prior to 2020. You're talking about a massive crash. It's going to make every bank insolvent. So this is the conundrum. So we're either going to hyperinflate, stagflate, or we're going to have a depression. And that is the truth. I don't see any way around that. You could say, well, can I have a little bit of both? I don't think so. That's not the way markets work. They don't deflate gradually and gracefully. So this is the dilemma. It's not my dilemma. I'm just going to invest around it. It's a dilemma of those people that did this to us, the perpetrators, which are the Treasury and the Fed, which is supposed to be there's supposed to be a wall between those two people. I think, you remember the former head of the Fed was Janet Yellen. So these two people can work hand in hand. They've done so in the past. And I believe if you ask me, you say, Michael, I need you to guess what's going to happen. The answer would be, I believe that Powell will have no choice but to re-liquefy the banking system, because the depression is going to be so deep, so trenchant, so cutting, so pernicious that he'll have no choice.